All right, so get this, right? I'm just sitting here. We're getting the book going, and we're on the chapter about wedges, setups, triangle setups with trend lines, right? This is all in the book. If you don't get it, no big deal, right? We're just looking at highs to highs, lows to lows, drawing trend lines, drawing supports and resistances, and using those to form wedge setups. So we're looking at wedge setups, and I'm on symmetrical triangles, and I'm just going out trying to find an example for a symmetrical triangle, right? Now, here's the deal. I'm looking around on stocks. I don't see a whole lot, so I decide, hey, you know what? Today's Sunday, right? It's like I don't know, 5, and we're getting. I wanted I wanted something more active. Probably like an hourly, maybe 15-minute candlesticks, trying to get an active perspective on symmetrical triangle setups. For just a last example to finish up chapter, I don't know, chapter 26, something like that. Unless I move them. If I move them, right? What are you going to do? So get this, right? We're looking, and I decide, go over to cryptocurrencies because 24-hour exchanges, that's the thing with crypto, right? It's a Sunday afternoon, and crypto's going to be popping. You've got 24-hour exchanges on these guys, and they will move all day. You're not constricted to trading hours, which is really, really nice, especially if you have like work or something, because you can really, really hammer it and get going even on like a Sunday, right? Just can't do that in the market. So here's the deal. I'm looking. I go over and I just pull up, some random crypto. And I'm thinking, what's been volatile? And not Verge. Oh gosh, Ripple. Yeah, Ripple. So I'm thinking I'll just check out Ripple. I put it on hourly candles, and I'm telling you guys, it's just crazy stuff. So here's the deal, okay? We've got this setup on Ripple, and you can see it here. It's just a simple setup. You have a support bottom here, bottom here, bottom here, bottom here, bottom. So it's a pretty well established support, and then you've got this slightly, you know, downward history for sure. But you come back here and you start to have a nice little resistance line, high there, high there, high there. So it's about, nice trend line, and it's got history over here being a trend line. So it's a pretty nice little setup. And this is, just like the past week, 2 weeks or something on Ripple. And here's the deal, right? To find something like this, all I did, right, was open up a chart, go to one of the first things I found that I knew just from like a little bit of history that, this is this is not, they're a company, right? But it's a cryptocurrency and it works. And, they've got their mission, they've got their goal, and they do their own thing. Um, and I know, they're not about to explode. They're pretty good cryptocurrency, and the same thing applies with stocks, right? They're not a terrible company. They do well. Maybe they don't make the most money. Same thing here, but they're not going bankrupt in the next week. So you can take a position on them with some confidence, given your history in the market, trading, and investing in things like this. So with that said, on just a random opportunity, you've got this terrific setup, and now we're going, and we're just gonna put a position in on here to see once we start to see a definite. Because the thing with symmetrical wedges or symmetrical triangles, which is what I'm talking about, you can't really tell because there's no definite up or down pattern. So you have to wait for the breakout to get your order entries in, and then once you get your orders entries and blah blah blah, it's all in the book, right? Point is, this is just a random position that I was just looking through tickers, or cryptocurrencies even. I mean, it's not even the stock market, and you've still got stuff like this that is just killing it, right? It's got perfect, like, terrific symmetrical wedge setup, and it shows. I think it shows two things. First thing is knowing what's up, right? If I couldn't identify those trend lines, uh, then I would just be clueless. I'd be like, who cares? I'd have no clue about the potential here, right? Second of all, with that, you have to be able to find the right graph. I'm not looking at daily candlesticks, and I'm not looking at weekly candlesticks. I'm looking at hourly candlesticks, and I know with a position like this, it makes sense to look at hourly candlesticks since I'm looking, cryptocurrency specifically, right? They're much more volatile than traditional currencies. So, the spread here, the upside on a trade like this is 36 cents, whereas the price is like 32 cents. So that's like 15%. I don't know, 36 over 32. 12.5%. Yeah. So it's got significant upside, and it's like all you gotta do is wait 6 hours for that trade. Maybe. Well, I mean, we'll see, right? Because it's happening right now. That's the thing, is there's always something happening in the market. It's always out there. You just got to find it. And a lot of the times it's just putting the grind in, putting in the work to go and say, just look through these stocks, and see if you see something. Because most of the time you don't see anything. But there's that one time, right, where you just pull up a chart, look at Ripple, and it's right there. It's just great, right? So with that, one thing with it is just always paying attention, because I know there's a lot of positions, and if I'm thinking specifically in like the past couple weeks, there was this one company. What was their name? The name escapes me. I don't think it really matters that much. I think the principle behind it matters, and the principle is, the stock was crashing down towards its 50 monthly moving average, and the stochastics were low, and stochastics are in the book if you need help with that. It was out of the Bollinger Bands. It was, by all means, it was a terrific setup. You could see a MACD. It was like right at the bottom of the pivotal curve. It was ready to flip. It was gonna go down. You buy it. It was gonna pop up. That was the plan, right? The only thing with it is, I saw it, and it was like a week before that happened, and you could tell looking at it that, give it a week, and it'll happen. And I wish I could remember the ticker, but sometimes, right, you just forget stuff, and what are you gonna do? It's like, oh well, that sucks, but you just kind of have to take it as it goes. You can't, you gotta take it as you go, because you really can't focus too much on one stock. It's all about diversification, right? It's all about having all these positions and all these setups and going from bam, bam, bam. Because if you're gonna pursue, active trading, you've really got to work to keep things moving, right? So that you're always outperforming the market, because that's the goal, right? Is significantly outperforming the market. So anyway, with the setup, right? It barrels down, and it's like a week. You can tell, like, looking at it, in a week, the price will go down to this moving average. Moving averages are in the book. The price will go down to the moving average. MACD will be perfect. Stochastics will be perfect. Even the Bollinger Bands, right? So it was all good. But you just had to wait. So, I got school, right? So I'm busy, and, last week I was working really hard on the book, and simultaneously I was working, I'm sure you guys, if you've been on this channel, you've seen the whole Monerads to CoinImp video. I was working really hard on that. We've been doing a lot of work with just trying to get in contact with these guys, get the merger going, so that we can really expand these operations. And then on top of that, I run an Ethernet cable manufacturing company at my school, and we had a really big deadline last week. So I was working really hard to get that fulfilled and done, which I'm very happy we got done. So the point was, I just didn't have the time, it felt, to monitor. And I forgot it. I can't even remember the ticker now, right? It's like, come on, you can't remember the ticker? It's like, it's such a great opportunity. So I wasn't focused on it, right? And you've really got to focus on this stuff, because I missed it, and I look back at it, not this week, but a couple days ago, and it bounced straight off the point where it was supposed to be, where I could see it going there, and I saw, this is what's going to happen. This is going to be a terrific thing, but it bounced right off of it in a matter of 1 day, right? It was there for a day. And, now it's up like 10-15%. It's like, dude, what the heck, right? Because that was like a quarter, a third, maybe half my immediate upside. Now it's like you gotta wait for a pullback. And it's bad news bears, right? Because you missed out. So, point is, you've got to get up with it, so that even if you don't want to, and I think the two things you could do is you could do a limit order, and just put your order at the price, and just leave it out there. And then the risk with that is, okay, well, what if it barrels down one day and just straight crashes? Because if you're looking at it, you're gonna see that, because it's not just, say the price is $50 and you put your limit order like 50-50, um, and then it just crashes to like, I don't know, 45, 40, $45 or something. Um, you're gonna see that happen in the live market, and you're gonna be able to react to that either lower, because it'll probably be a fast movement, right? So instead of having your order already up, you can, wait for the price to come down to 51, 50, 50, and then if it's moving really, really quickly, which is what would cause it to go below, say 50 was the moving average support level, right? If it's going to cause it to crash below that, you can tell in real time, because you're going to be able to see the momentum downward, the downward momentum, and it's not like a slow down to 50, it's like going fast. So you leave it there and you just watch it, and you watch it crash, and you see it get to that pivotal low point. And then when you're in real time, you can make the better trade than if you just put a limit order in. And that's kind of the trade-off of doing a limit order and then just ignoring it. And it's the same thing, if you do a stop loss and you accidentally get triggered, you can really get messed up with automated orders, which is why, robo managers, if you've seen the other video on that, that's something they have a big problem with, is robotic money managers. It's like, you just don't get that sense of what is the psychology, emotion, feeling that traders are bringing into the market right now, because you can see that and you can feel it with volume, with movements, and that's just something that you really need a lot of the times if you're making quick positions, like that position. Anyway, the second point was with making these charts in the book and then just accidentally stumbling on something like this, is being willing to act, which I think that example really does showcase. And constantly looking, I talked about that. So just always have your head up, because stuff will pop up and it'll happen really quickly. PG&E, the gas company that causes California forest fires, they recently, I think it was like a week or two ago, I was just walking around in school, and my buddy Jake, he's like, oh, check him out, and they're down like 40%. They're like the biggest mover of the day, or maybe it was huge, right? I mean, it was this ginormous electric utility company, and they just like crashed like nothing's happening, and it's all an overreaction to news. I mean, valid news at that. The wildfires, forest fires, and a lot of people pissed off. So you see stuff like that, and you can get a sense of the importance of 100% committing to a position when you see it, because the very next day the stock's up 30%, something like that, and they're just skyrocketing, right? And it's similarly, right, you've got to get out quickly, because the next day they were down again, and now they're down and down and down. So they're like, $40, $50, maybe even like 60. I don't know, I can pull it up. Point is, PG, yeah, the stock was at like 75 $70, and then it's got a temporary crash to 40, which you don't notice, but then you see the thing move to $17 from 70, and it's just and then it pops right back up to 30 or 40, and now it's down again to 30, and now it's down to 26. It's like you have these insanely fast movements, and it doesn't matter, right, if you're just trying to invest in the long term. But if you really want to kill it, you got to be on top of this stuff. So I hope this helped. It's just a mindset thing. It's all about the right mindset, because once you learn the essentials in trading, it's really getting the mindset down and just doing it. And if all these essentials, if the essentials don't make sense, just check out the book. And I really, really hope that does help a lot of people. Thank you guys. Have a good one.